In this video, I'll be showing you everything you need to know on the basics of candlestick charts. So whether you're a complete beginner or just need a refresher, by the end of this video, you will not only understand candlestick charts, but you will be able to read them like a pro. Let's get started. First of all, what are candlestick charts? Candlestick charts are the most popular tools used in analyzing the financial market. They are a type of price chart that show the opening price, closing price, the highest and the lowest prices for a specific time period, like the 1 minute, 1 hour, 1 day, 1 week, or whatever. They were first used in Japan more than 200 years ago when the Japanese traders developed them to track trades in rice futures. But today, they have made their way into the financial markets all over the world. Now, a green candle which shows that price is up communicates 4 pieces of information to us. The open should be right here, the close, the highest price, and the lowest price. Now, the red candle shows that price went down for the time period, and it also communicates information to us. Here's the open, the close, here's the highest price and the lowest price. Now, in this candle, here is known as the body of the candle, and it represents the range between the opening and the closing prices. Here is the body of the candle. Now, these levels right here that is extending from the body is known as the wicks or shadows, and they represent the high and low prices during the time period in focus. So what it means is that if this candle right here is a 1 hour candle, that means price open here, they got down a bit there, and then it went all the way here. That's the highest price, and then it finally closed here, all within 1 hour. Same will apply if it's a daily candle or a 5-minute candle, 1-minute candle, or whatever time frame that you are using. All right. Now, if the closing price is higher than the opening price at the end of the candle formation, that is a bullish candle. Price went up, and that candle is a green candle. Now, on the other hand, in a red candle, the price will open here, then got up to the highest here, then went all the way down here, and then finally closed here, all within 1 hour or whatever time frame that you are trading at. So, because the closing price is lower than the opening price, that is a bearish candle. Price went down and the candle is red in color. So basically, that's how candlesticks work in their simplest form. However, you should please know that candlesticks do not form most times in perfectly symmetrical or well-defined way. There are some special characteristics and unique candlestick formations that you need to be aware of. For example, a large candlestick like this one right here indicates strong momentum. If it's green like this, like we have here, it suggests that there is strong buying pressure, while a big red candle like this one may suggest that price is selling and is going down real quick. Now, small candles, on the other hand, represents market indecision or low volatility. They often appear during market consolidations. For example, this one right here is known as doji, and it forms when the opening price and the closing price are virtually equal. Price opened here, now it moved to this level, and then it went down here before finally closing at the same price that it opened. The length of the upper and the lower shadows can vary, and the resulting candlestick will look like either a cross, inverted cross, or a plus sign. But then remember that doji conveys a sense of indecision, or tug of war, if you say that, between buyers and sellers, and they can often signal that the market is ready to move sharply in either direction. Now, another type of small candle that has such a variation is this one right here. This is known as the hammer. Hammer candles form when price moves significantly lower after the open, but then rallies to close higher than the opening price. All right. So that means price opened here, then moved to this level. Okay. Then after coming to this level, then it rallied. It rallied up to close at this price level. So at the end of the day, the resulting candle will look like this square lollipop with a long stick. Now, in sharp contrast to the hammer, this one right here is called the inverted hammer. It is like a hammer that is upside down, and it forms when price opens here. Then buyers push the price all the way to this level, but then sellers gain control and push the price to close here. All right. The inverted hammer can either be green or red, and it often signals price reversal. Now, these two candlesticks are known as long shadows. Candlestick with an upper long shadow and a shorter lower shadow indicates that buyers dominated during the first part of the section. Bidding price is higher. Okay, buyers dominated, moving prices all the way to this level, but eventually price dropped to close at this price level. All right. Now, in sharp contrast, candlesticks with a long lower shadow and short upper shadow indicate that sellers dominated during the first part of the section. During the driving prices lower to this level, okay, but eventually buyers took control and pushed price to finally close at this price level right here. Okay, now I want you to take a look at this chart and see if you can be able to recognize some of the candlesticks that we just highlighted. Okay, you can pause the video and take a look at it. Take your time to observe how they appear in real market scenario and try to identify their significance based on what we just learned today. Okay, so mastering candlestick charts takes consistent studying and practice. Okay, it evolves with time and experience, and there are other concepts that I did not even cover in this video. So you can take your time, do more research. It is a skill that evolves with time and experience. So don't rush the process, but stay committed to learning all about candlestick. Okay, it is used in Forex, crypto, stock, and all the major financial markets. Okay, so finally, I think you should be aware that individual candlesticks that we just studied tell a lot about price action. But when different candlesticks are combined together, they form what we call candlestick patterns. These candlestick patterns can provide even deeper insights into the market trends and potential reversals. And I think I'll be making a detailed video on that soon. So stay tuned for that. All right, guys. Thank you very much for watching. Keep practicing, keep learning, and I'll see you on the next one. Bye-bye.